Hey, good morning, everybody. Welcome to another day of the Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day. It's January 13th. We got just one economic news release scheduled for today, and that is the Fed Beige Book. It'll be coming out about 11 o'clock Pacific Standard Time. So later this morning, we'll see this. This will give us some insight as to what the Fed is considering for the next rate hike as the dot platform that they came out with last meeting indicated that there could be 2 to 5 different rate hikes this year. Now, in the meantime, we are getting some Fed speak this week. We got a couple speaking later today. We had two that came in yesterday. Mr. Rosengren out of Boston basically had kind of mentioned that he doesn't. He's going to be looking at, with the stock market kind of going through a correction over the last starting out the year. He's looking at the global economy as to what determines a rate hike. If the economy looks like we can still support more rate hikes, this might come into a factor as to more decisions over the year. So that was one of the decisions he came up with. Of course, he wants to see it come up to 2% rising and stuff. So he was one of the Fed members that spoke yesterday. It has this past week where it started off pretty good and then it kind of went to negative territory. And all of it really comes down to oil. China, they kind of shrugged off, probably because even though the Chinese exports dropped for 6 months in a row, this is in dollar terms, not actual physical quantity terms. It's more for dollar terms. And if we remember, the Chinese bank did kick in, did some stimulus packages, and which devalued the yuan even further. So this kind of is more of a dollar factor. They do think it looks like things could be stabilizing in China when you look at a closer look at their data and stuff. That things are kind of stabilizing over there, so that could bode well for the world economy here, which they kind of expect later this year. As well as the problem with oil is that now they're kind of wondering how low is low. Right now we're down about $30 a barrel, but now some people are projecting maybe it goes down to 20. Some people think is one advisor even thinks it could drop down as low as $10. So. Per barrel. So this is until we get some stability and find a floor for oil, you might expect continued stock market volatility in the stock market until you get some type of footing as to how low the oil prices will go. Let's take a look here at the bond market, and right now, as we can see, we've pulled below the 200-day moving average so far this week. We haven't been able to stay above that 200-day moving average. Currently, we're above the 200-day moving average. We're up about 12 basis points from where we left off yesterday, which translates to a little better pricing from where we left off yesterday. But we'll see if it can maintain itself. So later in the day, usually it kind of pulls back. We saw that on Monday and we saw that on Tuesday. And both times we've closed below the 200-day moving average. So we'll have to kind of, again, wait and see if we can close above it and stay above it. So that would become an important floor of support for us so we can continue our rise above it. All right, folks, have a wonderful day. Thanks so much for watching. We'll see you tomorrow. Tomorrow we'll have the weekly jobless claims. And Friday will be kind of more of the bigger reports. We'll have the retail sales, consumer sentiment. We got a little bit of manufacturing thrown in there, so it'll be a lot of coming out on Friday. So it'll be more of a bigger impact day. All right, have a great day, and see you tomorrow. Thanks again for watching. Bye.